Hello friends, welcome to my channel, Net Charity. In the education series, today, renowned chartered accountant Shri Vipin Batavia, an eminent speaker on charitable organization, gives his insight on the topic, impact or consequences of cancellation or rejection of registration U.S. 12AB on income tax exemption for the charitable organizations or non-profit organizations. Today's topic is very important as cancellation or rejection leads to payment of huge taxes and penalty. Before going further, let me request you that if you like the video, kindly like, subscribe and share the channel. This will be a gratitude towards the speaker. Let's start.
Yeah. So impact of rejection. Now suppose if you are granted renewal, then fine. It's good for next 5 years or 10 years as the case maybe you are being granted. But if it is rejected, then what will be the impact? The rejection of registration leads to cancellation of registration. I think after this slide, they will straight go for the form. The CIT may deny the renewal of registration and also initiate the cancellation proceeding at the time of renewal proceeding. And proceeding for cancellation is a very serious matter because we'll see on some other clauses, 115 TD provisions will apply. What are those provisions? You all are aware. I'll explain later on. The finance, no, let it be go back, please. Now the second is Finance Act substituted 12AB 4 and 5, where if there is a cancellation of registration on a specified violation. Suppose a trust is doing a specified violation, then the CIT can initiate the cancellation procedure. Then now if substituted 4 and 5, where also it says a violation of earlier the 13(1)C, 13(1)D and 13(3) people, those violation 11 will not be granted. The heading was there and they were rejecting the whole exemption. Now with this amendment where there is a specified violations and a specified income. So if it is falling under a specified income, in those income to that portion of income, you have to pay the maximum marginal rate, that is 30%. Say if your investment is not done in 11(5), 13(3), some related persons you have paid unreasonable amounts, and 11(1)D, the corporate donation provisions are also not followed, and in some cases 11(1)C means the activity outside India. If you have done, then in that case your trust will not get the cancellation proceeding, but on that particular income you have to pay the maximum marginal rate. So that is there. The Finance Act 23 years. Then again they added one very important provision to specified violation. I'll read that because it is applicable to renewal. The Finance Act only added one explanation to provide that giving incomplete, false or inaccurate information in registration application will be deemed as a specific violation and can lead to cancellation. See, so now earlier there were three words were mentioned: incomplete, false and inaccurate. Now here, with effect from 1/4/25, the word incomplete is deleted. Means if your application is incomplete, then they will not proceed for cancellation. They may ask to correct the application, or they may ask to submit the details, whatever is required to be done for that, and they can go ahead for registration or rejection. So here you have to be very careful. If you give false information or inaccurate information, because not only the rejection of renewal registration will be there, cancellation proceeding will be initiated. And that's a very serious matter. Then not applying for re-registration. Now another 115 TDR, they have added some more clauses. If you do not apply for renewal, or if you miss, there is a condonation. But if you do not apply for first originally re-registration 1/4/21, then now renewal if you are not doing, and if provisional registration also you have not applied for conversion into a regular registration, so there also the provisions of 115 TD will apply. And in short, provisions of 100TD says a trust has to pay maximum marginal rate, that is 30%, on the assets minus liabilities. And the assets are to be valued at the current market value. So it's a very serious matter if the trust is having immovable properties, and that too very old immovable properties, their value is very high, and so their tax liability will be in crores and maybe a big amount. Even if it is immovable property is not there, the calculation is also coming very high. So thing is this, you have to be very careful while applying. Please don't give any false information. Don't give inaccurate. And we chartered accountant, just to support and make happy our client, we give some false information and inaccurate figures also. I have a case wherein the chartered accountant has been sued for such mistakes. The trust has suffered crores of demand. So that action can be taken against us. So I advise, and one more principle from this amendment, I have my own finding, it is that inaccurate is better than false. You all will agree with me. In case there is an inaccurate application, it will not go for cancellation. But don't give any false information. Next. See, cancellation of registration, there are three reasons for that. Three processes are there. Occurrence of one or more specified violation, has received a reference from the cancellation or assessing officer. Now, assessing officer has come to know under 143.3 assessment that this trust has done some violation. So he may. It is not word is used may. It is used should. So AO has to give a reference to CIT to proceed for cancellation. It is the CIT will decide whether it is liable for cancellation or not. And third is any with the risk of management strategy formulated by the board from time to time. Next, please. Specified violations, there are there, but most important is the last one. Any activity carried on by the trust or institution is not genuine or not being carried out in accordance with or any of the conditions subject to which it is registered. So according to me, these specified violation, these things are covered. So in that case, you have to be very careful, because if not complied with the requirement of any other law is also there, it may lead to cancellation, but there is a change for cancellation and for granting registration. Granting registration, he has to just see whether compliance has been done or not. But for cancellation, he has to see whether that non-compliance has occurred, has either not been disputed or has been attained finally. Then only he can proceed for cancellation.